What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update to bring all of you this afternoon. So what we're going to be talking about in this video is a little bit of an Ortex short interest and utilization update for AMC to get a better understanding of where we are at the current time with those key metrics. We're going to do a little bit of a Fintel analysis because a lot of people have been talking about the fact that Vanguard may have bought even more shares than a lot of people had thought. We're going to go over that as well. And what we really need to focus on in this video is something that I have been saying over the last couple of months. People have been calling for this really big price run up in AMC and wondering when this is going to happen. Now, my thoughts on this are we need to have almost somewhat of a perfect storm of events. Some of those events are going to be related directly to AMC, and some of them are going to be more broad market events. What we are seeing right now in not only the price action, but those broad market events are really telling me that we could be in this somewhat of a perfect storm, and we could be potentially seeing that next really big leg up. We have a lot of these margin rules coming into effect this week that are really going to further the liquidity drain that we have been looking for and seeing out of a lot of these institutions over the last couple of months. So before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And the more people that we have staying up to date with accurate AMC information, the stronger our community becomes. And if you want to see more videos like this, make sure you hit that subscribe button. So at the current time that I'm recording, AMC is just above that $46 mark. Now, I apologize if the price is slightly different or vastly different by the time that you guys are seeing this video, but I did start my first week of my senior year at college this week, so I'm gonna have some times where I do have to record videos a little bit earlier. But again, this is a very bullish day for AMC so far. If we are able to break above this $46 mark, it's just going to further that stair-stepping price action that we have seen and gets us closer to that next really substantial price run up. Now, when we come over to Ortex, we can see that the utilization right now, 93.39. This is another good step in the right direction. We are seeing the utilization increase, which does put a lot more pressure on some of these lending institutions, but we aren't necessarily at the levels yet where we could be potentially seeing a lot of those for share recalls. From what I have seen in the past, we would have to get at about 98 to 100% utilization to really think, well, game on, we could see a lot of these forced buy-ins get issued out into the market. The short interest right now, according to Ortex's estimates, 17.1%, still incredibly high. The shorts have not covered. Now, when we come over to Fintel to talk about this Vanguard situation, so when we're looking at when Vanguard's filing date had come out, 8/13, so August 13th, they increased their position size by about 18%. Now, we have a lot of these other filings that came out on August 30th, but when we click for advisory here, and we see a lot of these additions in Vanguard's different ETFs or portfolios, this fund is listed as a child fund of Vanguard Group, and if that institution has disclosed ownership in this security, then these positions will not be double counted when calculating the total shares and total value. So most likely, these shares have already been accounted into Vanguard's total shares at the current time. In addition to this, we also have AMC getting added to this MSCI index, which could basically provide a little bit more buying volume that we need to see to push the share price of the stock up throughout this week. So a lot of bullish things are surrounding AMC right now. I honestly cannot point to one thing that is a bearish indicator for where AMC is at the current time. Now, moving on a bit further to really give us an understanding of potentially this perfect storm situation that we really have, when we come over to Stonko Tracker, we already have 68,000 contracts expiring in the money this week for AMC, but this is just a weekly options expiration date. When we come down to the next monthly options expiration date, we already have 144,000 contracts in the money, and this number is just going to continuously increase as we see AMC trend to the upside. And what this provides for is a lot of hedging volume on the buy side from these institutions who have sold these calls. As we continuously increase, more calls run in the money, more calls run deeper in the money, and force more buying from these institutions to stay directionally neutral. neutral. Again, another incredibly bullish indicator. Now let's get into this margin situation and in exactly what I am expecting to happen with what we have going on. So we have this phase 5 UMR, and we have these comments from Bob Stewart, Executive Director of Product Management for Institutional Trade Processing. We have been over this many times on this channel. They are projecting an upsurge in the volume of margin calls and an increase in the need for third-party custodians to keep safe collateral. So this is a big rule, and it revolves around these OTC derivatives. Now, derivatives are one of the reasons why the market can run out of control. Warren Buffett has said this many times, that derivatives could be the cause of the next massive market meltdown. I've shown you guys in the past that the total OTC derivative exposure across the entire globe is about $582 trillion. This is a big deal, and we could see a lot of these institutions have a lot of problems with this rule. And when we come over here to see who exactly it affects, phases 1 through 4 covered banks, but phases 5 and 6 will predominantly impact funds and institutional investors, meaning hedge funds. So here is what we really need to get out of this. Tomorrow, when this rule goes into effect on September 1st, is this going to cause the squeeze? Most likely not. It is entirely possible that we see a really substantial price run up tomorrow, but it is completely unrelated to this phase 5 UMR rule. But what this is going to do is it's going to start draining the liquidity of these institutions who are going to be trying to enter into these wildly over-leveraged or intricate OTC derivative plays. Now, there have been some speculations in the past that a lot of these OTC derivatives could be used at the current time to try to push down the share price of AMC. And again, if that is true, this rule is awesome news for us apes. So this is great. We have phase 5 UMR coming into effect. Great news, but we also have some other things that we need to take a look at as well. When we come over here, we have NSCC 005. We have this increase in the initial required fund deposit from every single member for every single account that these institutions have at the National Securities Clearing Corporation. What this really does, in my opinion, it's not going to affect these larger institutions. They don't care that they're going to have to put up $250,000 per account because they have so much money. But what it is going to do is really affect these smaller institutions that could or could not be over-leveraged on short positions, long positions, on AMC, not on AMC, on GameStop, not on GameStop. It doesn't really matter, but what it does is it puts pressure on these institutions to basically come up with the liquidity that is necessary to maintain these margin requirements. Again, this is another very bullish thing over the long term for not only these short squeeze situations, but for the broad market as a whole. Now, in addition to this, we also have this rule over here coming into effect on September 3rd, I believe, when we can see here, effective on September 1st. So this one is going to be tomorrow as well. So NSCC 005 is September 3rd, which is going to be Friday, but phase 5 UMR and this rule that we are looking at right here come into effect tomorrow. What this is essentially saying here is it's taking away the ability for some securities to be used as collateral. Now, a lot of people have been saying that these could potentially be the reverse repo transactions that we have been seeing absolutely skyrocket over the last couple of months, but I have seen some counter arguments that these securities that are being referenced in this rule are not necessarily the U.S. Treasuries that are being basically passed around back and forth in these reverse repo transactions. So it would be very good news if they were using those securities as collateral, and now they are no longer going to be able to. But at the same time, it is lowering the amount of securities in general that they're able to post as collateral. This is another thing that basically puts the handcuffs on these institutions that could further drain this liquidity because they're going to have to come up with different ways to meet these margin requirements. So let's get back to this perfect storm thesis. We are seeing a lot of things start to come into effect with just these proposed rule changes, what we have on the option chain, the short interest, and the price action for AMC. We saw something similar to this happen in June, but what we saw happen in June was mainly we just had those crazy high amount of open interest at that $40 strike for that June 18th expiration date. That is why we saw that very significant run-up. We saw the gamma squeeze, the FOMO rally, and some shorts starting to cover. But what we have now is the potential for not only these smaller shorts having to cover their positions, which in my opinion is what everybody should be focused on right now, not the larger institutions, because they're going to be able to figure out ways to get around these margin requirements at the current time, or to basically post the margin requirement that they need in order to maintain their position. But here's the thing. We could end up eventually, it may not happen this week, it may not happen next week or next month, but eventually we are going to get to the point where the stock ends up going to a certain level where these institutions are not going to have a choice but to cover these positions. And we are seeing the potential for that really start to increase. And it just makes me so bullish on what we have going forward with our two favorite stocks. So that is going to wrap up this update on AMC. If you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I'm trading and which strategies I'm using to trade them. So I hope you guys are having a great day, and I'll see you guys in the next video.